BlackRock's done it, Apollo's done it. Nobody wants to be left behind. Everybody wants to have an entry into the market. So I think it's more of how do we also get into the space so we're not left behind. So I think that's where the conversations are really happening right now.
Today's Talking Tokenization guest is Suzy Singh, the Deputy Chief Operating Officer at Securitize. While many people know Securitize for its work with BlackRock, Apollo, KKR, and other major institutions, and for going public recently, Suzy sits at the center of the day-to-day execution, working directly with many of these firms. So she's super important, and I'm excited to chat with her. Suzy, welcome on.
Thank you so much for having me.
Thanks for
Quite an
being
intro.
here. Yeah, I know. Well, warranted. We start this series by asking, how would you define tokenization?
How do I define tokenization? I think I would describe tokenization as a ledger that's using blockchain technology, which brings in operational efficiencies, transparency, and all the things that you've heard from everybody else at Securitize, right? I think for me, tokenization is just giving that access to certain individuals or institutions that wouldn't have access in today's current infrastructure and market.
Mm-hmm. What would you say has been the biggest shift on this front that you've noticed maybe over the past quarter or two since the beginning of the year?
Since the beginning of the year, I think I have just seen every single firm talking about tokenization as you're going to more conferences, as you're looking at all the medias that are being put out. It's, from BNY to JP Morgan to Citi, I think everybody's just talking more about tokenization. And that shift has really started happening more since like the end of last year and this year, which wasn't there previously. Like when I first started at Securitize, I don't think many people were talking about tokenization. I think that just started coming more so now. And with BIDL being one of the biggest products out there, I think that also changed that mentality and that made that shift happen.
Mm-hmm. What do those conversations actually sound like today compared to when you first started? Do you find that a lot of times when you're speaking with new institutions and existing ones, that they know what they want and the strategy they want to implement? Or is it still kind of like, hey, we're exploring and we're thinking about this?
That's a great question. I think it's a bit of the latter, right? So a lot of the new issuers or asset managers that we talk to, everybody knows what tokenization is, what it brings into the marketplace and the environment. I think right now, a lot of the firms are still in that exploratory phase to understand cost efficiencies is like primarily driver. Distribution is another driver, right? Where it's more of, yes, I'll put it on chain. I have this product. It has great functionality, features. It's what, currently is thriving. But what does that unlock bring when we put it on chain, and how do I save money? I think those are the biggest drivers, and then getting their senior leadership to sign off on it. So you have every asset manager or every, private equity firm, hedge funds, all of those that actually know, like they have a digital asset team that knows about tokenization, but then they have to convince their senior leadership. And that's where we're seeing the shift. Is everybody talking about tokenization? To some extent, yes. I think every firm is talking about it because that's the calls that we have on a daily basis. It's then making it up to something tangible and proving it to their board in the most efficient manner.
Yeah. And we say institution kind of as like a catch-all phrase. And you just brought up like hedge funds, private equity firms, asset management firms, and the list can go on. Where are you seeing like the most demand out of like the subcategories within the broader institutional lens? Like, is it mostly asset management firms, traditional banks? How do you categorize like where the actual demand is? Or is it really across the board?
It's across the board. I mean, I think the biggest ones right now would be asset managers and banks. The hedge funds and those kind of things, they're going more towards like funds, crypto funds, and trying to explore there first before they start doing tokenization. But when you talk about the big banks and the asset managers, that's really where the demand is coming from because, nobody wants to be left behind. Everybody wants to have an entry into the market. So they've seen, BlackRock's done it, Apollo's done it, Morgan Stanley's done ETFs, right? So I think it's more of how do we also get into the space so we're not left behind. So I think that's where the conversations are really happening right now.
Mm-hmm. Are there any ones out there that, I guess if you're not having conversations with them, then maybe this already answers my question, but it's like the idea of not wanting to be left behind and the idea of like FOMOing into this, right? We're seeing it proliferate, but then are there still some like hesitant teams where it's like if you met them at a more traditional conference or something, they'd be like, no thanks?
No, I think we're literally talking to all the big ones that you can think of.
So they're all in.
They're all in. I think it's all in to a certain degree, and then obviously building up that use case is where things are happening right now. You know, you might have some that are more focused on IPOs, and you might have others that want to do more funds, right? So I think, or fixed income products or money market funds. So I think it's also figuring out what the right space for them is and where the demand is for them in particular based on their niche abilities.
Yeah. I also know from the conversation I've had with some teams like this is like that, sure, you'll have the initial conversation, but it'll take anywhere from like 6 to 24 months for it to actually launch and then become public. So like, it's like when we see something in the public today, it's like, it didn't just happen last week. You guys have been speaking to them for a very long time, right? Has the timeline for that sped up a bit, or is it still that 6 to 24 month like leadway to actually coming out to the public with what you're doing?
It's still that 6 to 24 months. So, you know, when you see a lot of these announcements that come out, it's because we've been working on the background with these asset managers from months in advance, right? Like I can give you not names, but like every asset manager that wants to do a project, and we've been talking to them. There'll be like an RFI process, then there's a due diligence process, then there's an operational workflow process, and it's convincing senior management. So I think the quickest product we probably have done is probably 6 months, and everything else is usually a little bit longer when it comes to end-to-end life cycle of let's start having the conversation to actually go live. And that just includes a lot of different things, right? Like you have fund formation and creation, like this is my day-to-day. Fund formation and creation, you have like opening up of the accounts, the registrations of the entities, the due diligence aspect of it, operational flows, the compliance piece of it, all of those things kind of get incorporated into those timelines. Mm-hmm. And the bigger the asset manager, the bigger the requirements.
So is it safe to say we can expect some of them coming up in the next 6
it's
to 24 months?
Safe. Yeah, you'll see a lot of things coming in the next couple weeks.
Yeah, okay. I would ask what, but I'm guessing I won't get an answer.
You're not.
No.
You know, our compliance, the legal team, and everybody else will kill
Everyone
me.
would kill us, yes. Fair enough. Has anything surprised you about maybe how they have moved from like pilot to production over the past year? And like, I know we just talked about maybe the speed of it, but maybe the depth of it all, right? Because I wouldn't say like quickly or slowly, because it is still at that like slower pace than maybe like the way a startup would probably like pop something up within a couple weeks to a couple months. But what else has surprised you on the front of like that pilot to production phase?
I would say all the onboarding. I think for me in particular, I think when I have to get some of these projects going, it's getting onboarded to particular asset managers and like the vendor capacity and all the due diligence that they do on us as a registered entity, now a public entity. And that's where, you know, the pilot to production takes a while. So to do a pilot from like the Securitize standpoint, even though we're public right now, we can get something launched fairly quickly. I think it's getting the buy-in and going through all of those areas is actually the driver on the delays and the timing. I feel once we have done one project or two with said asset manager, the next ones will just be faster, right? Because we've already done step one. We've onboarded, we've gone through all the due diligence, we've done the compliance aspect of things. Now it's like, okay, product one is launched. Let's talk about product two. And that's going to be a shorter timeline because now instead of 12 months to do the whole back end work and talk about tokenization, do the teach-ins, do the webinars, we've done that. So project one can go, and then 6 months later, we could definitely do a project two that would be definitely faster.
Yeah. Did becoming a public company change the way these firms view Securitize? Has it altered any of the conversations you're having with prospective clients? Like, what has kind of been the impact there, if any?
It has definitely made a change because now we are more stable and secure. Like I've been in a room where Carlos was having a conversation with someone and they were kind of Unsure, but the minute we talked about being public, that kind of changed their viewpoint because now they know we're not really going anywhere. We're backed, we're secured, and there's less of a risk when it comes to us just being a private company or considered a startup.
Mm-hmm. What would you say is kind of the strategy then going forward as you balance, public equities versus on-chain equities as a publicly traded company?
I mean, we have our equity on chain already. We did
Mm-hmm.
that day one. So, I mean, that's the goal, right? Like, I think it's giving every single investor that option of how they want to hold it. Like, I was reading a news article today where Samsung is coming out with being able to accept stable coins in Samsung Wallet, right? Eventually, that's going to be a part where you can actually do more than just stable coins in a wallet that's on your phone, right? You might be able to hold your funds in your wallet that's on your device. Like it could be Apple Pay or it could be Samsung Wallet. And if it's like a stablecoin money market fund, it just gives that access to investors in a lot easier methods than they would have right now.
Mm-hmm. Aside from the obvious of like earnings, quarterly reports, etc., is there any operational differences now that you have to take into consideration? Because I would also imagine this helps companies understand how, like off-chain companies, how they can come on chain since Securitize is now living it too and doing both sides.
From our side, I think it's now that we're public, it's all the processes, the sign-offs, the permissions that we have to make sure we're following. We have to be fully compliant. We have to report everything to our investor and that transparency. So I think that's the big difference. As far as with other asset managers, I think that also changes in their lens because now they see a lot of our data is already out there and published and they know where we stand as a firm. So I think those changes are also there. And then the rest of it is all operational lifts, right? Of making sure that finance has what they need to make sure audits are happening timely, working through revenue projections, right? So that they're documented properly for earning calls and things of that nature.
Mm-hmm. I know one of the first major announcements too after Securitize went public was the tokenizing of sexy SECZ, your token, or I'm sorry, your ticker on day one. So why was it important to kind of demonstrate that capability immediately rather than treating it like a future roadmap item down the line that you guys would get to at some point? Because you guys did it day one.
We did it day one. I think it was very important to us and our leadership team because that's what we talk about every day, right? We want to do tokenized equities. We want to do it the right way. We want to do it issuer sponsored versus a lot of the wrappers and synthetics that are going around. And what better example to do it with than our own, right? It's like putting your eggs in your own basket versus trying to have other people do it first. We wanted to lead by example and do it ourselves.
Mm-hmm. And from maybe like a inside look or operational perspective at all, like what did it actually take to tokenize Sexy?
Getting all of our shareholders to agree to doing it, the ones that did tokenizing it, making sure that they all completed their documents in time and doing a lot of chasing to ensure that all the documents are getting done in a timely manner, working with our traditional transfer agent, in this case it's Continental, to ensure that they have everything that we need in order to tokenizing it, because there's a whole process that goes behind it when you look at behind the scenes of sign-offs, approvals, and all of those things. So I think those were the biggest things that we worked on over the last 2 weeks prior to going public once we had everything. And then as soon as we had that, I think the day of going public we were able to deploy, at least for those small subset of holders, directly on chain. We were able to enable the trading with Jump. And now we're still working through some of the other shareholders that do want to tokenize, and we're going to be issuing to them shortly too.
Mm-hmm. What would you say are some of the biggest lessons from that process?
Start the process earlier. To me, I think that's what it would be. I think it's making sure that their traditional TAs work around the same speed that we would, or we want to make sure that the shareholders have enough timing and advanced notice to be able to get what they need to get done in a timely fashion. So we're not chasing everybody and there's no delays that are given.
Mm-hmm. What do you ultimately hope that, the teams that you're having conversations with or other institutions take away from this, seeing a tokenized equity product live versus simply just like hearing about the process or something?
I think it's trying to get more. equities in particular out in the market do that done the right way, right? This goes back to the whole issuer sponsored versus the synthetic and wrappers. I think if we get more larger entities to come in and do the issuer sponsored tokens the right way, that enables the trading, that enables another set of market that currently doesn't exist. And that can only start with a big name. I mean, how did tokenization get even bigger than what it was in 2021, right? BlackRock came out with Bill. That's when everybody started talking about it, even though you had Benji, you had other products that were live already that have the same functionality as what BITL does. It wasn't as big until BlackRock came around. And I think if you have another one of those that comes into the equity space that is a big name that everybody's looking for, that's where I think things are going to start changing, and a lot of other issuers are going to start thinking about it, because again, we don't want to be left behind. So if like Microsoft is doing it, or GameStop is doing it, or SpaceX is doing it, then it's going to make other people start thinking as to why are we not.
Right. Do you think we'll have another like BlackRock-esque moment coming in to do exactly that?
I am very hopeful, yes. That is the goal. That's what our team is trying to drive towards every day. So more to come on that.
In general, there's also been like a lot of focus on tokenized funds, private assets. Why do you think the on-chain equities conversation and implementation is becoming such an important part of the process now?
Distribution, right? So current products that are out there in the US market, in the traditional space, they're not available to offshore investors, right? Or when I say offshore, it's more of like the EU or the Latin Americas. And I think tokenized assets provides them more of that availability where they are able to invest in these kind of products. So like, I think I was having a conversation with someone the other day, and in certain countries in their bank accounts, they can't hold US dollar denominated currencies, right? So that includes money market funds and everything else. So when they're saving money for, say, to send their kids abroad for colleges, they're not able to save to that capacity because their currency may be volatile and fluctuating. So if we give those kind of people access to these products, it can help them on a day-to-day basis. And a lot of countries outside of the US don't really go for brokerage accounts, right? They have their own systems. And, in Europe or Latin America, I think most people have more crypto wallets than they do a brokerage account or access to securities that will be beneficial for them. So I think those are some of the key drivers as to why this is now becoming a bigger discussion point. It's all about distribution and getting more assets on chain to bring in more AUM.
What would you say is like the timeline for majority of assets to be on chain? Because right now it's a smaller percentage, right?
I think everybody's talking about 2030 is going to be like the biggest change, right? Like by then it's going to be a completely different market, because once all the big banks are bought in, all the big asset managers are bought in, and you start putting some of the traditional assets on chain, you figure out how to do fund accounting. Right now, if you think about fund accounting, a lot of banks don't know how to differentiate between, when they're doing their NAV calculations, the difference between how to line item a USDC versus a cash equivalent, because it's not the same thing, or a USDT, because it's not always going to be a dollar to dollar. And I think once that infrastructure is figured out, it's going to be rapidly a quick migration towards more assets on chain.
I mean, the ultimate end goal too is then just to have like access to US equities at a global scale then, right?
Correct. Well, US and others, right? Like why?
And then inverse, yeah.
Yeah, exactly. Like, maybe there's stuff that's happening out of the UAE that we don't have access to being US residents that we could get access to in the future. So I think it's just going to make the world a smaller place than it already is with, social media and Wi-Fi and everything else that we have right now.
I mean, I see the argument for it, and I don't see why we wouldn't have like access to these different equities through other regions, countries, etc. But what would be the argument against it? Like, are there people out there that are like, no, we shouldn't have access to what's going on in the UAE or Europe or something like that, for example?
I personally don't see the argument in not having it either. I think for me, the biggest driver that, that could be a defense mechanism is primarily around compliance and AML. I feel like if you can comply with those kind of guidance, then you should be able to access any market. It's me as an individual taking that risk, right? Like if I want to invest in a gold commodity that's out of the UAE, that's a risk that I'm willing to take as long as I am meeting the requirements of that particular jurisdiction and I don't have any sanctions or adverse media or any of those KYC AML flags. I don't see why that should be a problem.
Yeah. I also want to talk about the recent announcement Securitize had in its collaboration with Cantor Fitzgerald around blockchain-based IPO shares. What was kind of the problem you two were trying to solve here with this partnership?
So, I mean, I think everybody saw the whole SpaceX dynamic that happened, right? Where SpaceX had allocated some to the retail share class. Some entities wanted to tokenize it, but they didn't get the allocation. And I think the joint press release that we did and the partnership is primarily to get IPOs to be able to distribute day one, right? Like the way that we did with Sexy. If we were able to do that with an OpenAI or a SpaceX, that could expand the marketplace significantly for those companies, right? Especially if they're trying to raise large capitals. I think that would be the biggest turning point for that. And that's why we're trying to partner with Cantor, because they're big in the IPO space. We can bring in the technology and work together into creating a whole different marketplace for secondary trading, primary trading, listing on ATSs that is not there right now. So first market.
Mm-hmm. And then what would be the types of companies you guys would want to kind of pilot or trial this first?
Everybody has their own opinion on it. I think it would probably be a big name because that's what's going to make the splash, and that's what's going to get others to start moving. But obviously, the big names are going to want to wait until someone else has done it first before they want to potentially take a risk or adventure in something new that they're not familiar with because it hasn't been done. So it depends on who you ask. I would say if we have a big name, that'll just get everybody to start moving. But it's probably going to be a slow evolution.
Yeah. If the model then ultimately succeeds, how would you say the IPO process would look different, maybe 5, even 10 years from now?
I think then you'll just get an option, right? Like you can either try to get into an IPO early. Like I know, certain brokerages offer that right now where it's like, oh, sign up to get an allocation through SoFi or Schwab. Now you'll get that option through your wallet or, if an exchange or another distribution partner that you might already be facilitated with, where you can get that option to get that IPO directly into your wallet day one. So it's going to allow the individuals to be able to pick and choose how they want to hold their securities. And I think the more assets will probably live on chain in the next 5 to 10 years than they do in traditional brokerages firms. Just because it's faster and easier, and it's cost efficient. I think those are the biggest factors behind it.
When you kind of think about where Securitize is headed as a public company now, and then what success looks like for on-chain capital markets, how do you kind of categorize that over the next couple of years? I know we talked about 5 to 10 years with the last question, but maybe more near term. Is it kind of measured more by tokenized assets, more institutional participation, or something else entirely?
I think the shift is kind of shifting now to more of let's do more retail as well and not just institutions, because institutions are already coming, right? Like they already know what they want. They're working towards it. Institutions already know what tokenization is. At least some parts of the firms already know what that is and what that brings for them as an entity. Same thing for those that are investing in tokenized products, right? Like they know what's going on. They know what they're trying to get into. They know that, there's more volatility in the crypto assets that they might be investing in that they don't have in tokenized assets. And that brings them a little bit less of a risk and more exposure to TradFi. I think the next phase is definitely going to be more towards retail, because as you start educating retail, that's where also, and retail starts coming in and they understand the difference that, having a tokenized money market fund is not the same as having a Bitcoin or Cardano or any of those other cryptocurrencies, right? Or meme coins or NFTs. It's very different. I think that's when the space is going to change even more, because then you'll have the large not institutional, but like the large retails that are accredited or QP they will want to come in and be like, you know what, let me invest my money in this because I'm getting a higher yield. I can do more. I can put it in for leverage looping and earn 2x versus what I'm earning right now in the traditional space. So I think the shift towards more retail, that's what that's going to create. And that's going to make the asset managers and the institutions want to do more tokenized products because they're going to start seeing that demand.
Mm-hmm. We haven't had that retail wave yet, though, right? So what will it take to kind of get them to come in? It would be a product that would be so intriguing that they couldn't get that in the traditional markets, right?
Yeah, I think it's coming. I would say maybe, end of this year, early next year, I'm sure it's going to come. Like I've seen an evolution during my time here at Securitize, so I wouldn't be surprised if that happens sooner than later.
Yeah. And I think not for nothing, like so much of the focus has been on institutional interest, which is warranted, right? They are obviously respected entities. They bring in a lot of capital, influence, tons of other things. But like retail is also the backbone to a lot of different markets, right?
Yep.
So I think like the overlooking of it or like people not addressing retail currently is a miss. No?
I 100% agree with you. Like I have some family members that could come into any number of these products, but they don't know what tokenization is, right? Like their QPs, their AIs, they can invest in BIDL, they can invest like even with the 5 million minimum. They can come into any one of the products that we offer or anybody else that's tokenizing offers. But because they don't understand what it is, they're sticking to their traditional rails. So when you're trying to educate the retail population, right? Like in my case, when I'm trying to educate my family, it's hard to get them to understand. And I think once it becomes a bigger thing where retail is actually talking about it, that shift is going to be the one that changes everything because then companies are going to start thinking about what products can I put out or how can I change my current products, right? Like if I have an ETF that's in the traditional space, how can I make that also available for tokenized form that these retail investors can get access to that might not be able to for whatever reason.
Mm-hmm. Is there a specific strategy that you guys have then for engaging retail? Because it is different.
It is different. I think it's talking to a lot of different distribution channels, right? And that's what we're working on. There's a whole separate team that's targeting that on a daily basis to understand the demand of what retail is looking for while with these distribution channels. And then it comes back to us working with asset managers to kind of show them that TAM to come out with products that meet that demand.
Yeah. One of my last questions for you, Suzy, is on the front of like trends and things that you're seeing. Obviously, you have a front row seat to some of the largest firms entering the space. You have a lot of conversations here. But what is maybe a trend that you're seeing that you think the broader market is still underestimating on this front?
I think the trend that I'm seeing is everybody's talking about it, that the broader market may not be seeing. That's the biggest thing. It's a couple years ago, nobody was talking about tokenization. It's like every call that you went into, you had to explain what tokenization is, what blockchains are, how the gas fees work, and all of those things. And now that conversation's kind of decreased. And it's more of like, okay, how do I save money? What's the operational like workflows? How does it sit with the current workflow we have? So the conversation's kind of shifted into that angle. So, and it's not more of like, what's the benefit of tokenization? I think that is industrially stood by these asset managers or institutions. Now it's more of how do I have everything sit side by side where there might not be a heavy lift that's required on their side or on their team. It's more of just plugging everything in together.
Yeah. And then lastly, Suzy, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Patience. I think everything just goes down to patience. Having patience, working through everything and being wishful and hopeful and just working towards success. But patience is a key word.
Yeah. Especially in those 6 to 24 months.
Yep.
Amazing. Well, Suzy, thank you so much for coming on today.